Hey everyone, in this video I'm going to discuss why everyone's talking about NIO stock lately, and I think it's mainly due to its recent earnings report on here in the conference call it held on June 9th, where NIO updated investors on how the company's sales, profits, and expansion is going. So in this video I'm going to elaborate on those factors so we can get more insight into why everyone is talking about NIO stock. So let's get right into it here. So the CFO, Stephen Fang of NIO, saying that vehicle sales in the first quarter were RMB 9.2 billion, and that was a decrease of 0.2% year over year. A decrease. This is a rising, growing electric vehicle company experiencing a sales decrease year over year. And so that's in itself drew a lot of headlines. The decrease in vehicle sales year over year was mainly due to lower average selling price and the result of a higher proportion of ET5 and 75 kilowatt hour standard range battery pack deliveries, which are the lower priced models that go for lower. And so if customers are buying the lower priced models, that's going to decrease the overall sales figure. But the figure itself, just because it was a decrease, drew a lot of headlines from NIO and NIO, those interested in NIO. And I would say that that was partly the reason why NIO came out a couple of days later on June 12th and announced price cuts on many of its models ranging from 6 to 9%. So NIO clearly not happy with the sales decrease and is doing something about it. So other sales in the first quarter increased by a whopping 118% year over year. The increase in other sales was mainly due to the increase of sales of accessories, provision of repair and maintenance services, provision of auto financing, sales of used cars, and power solutions as a result of continued growth of our users. Now, I will highlight that this is one of the main reasons why several other EV car makers have begun to slash prices, and Tesla actually noted this reason as for why it can afford to cut sales prices on its cars, because it says that in the long run it can make up for lower car selling prices by selling more services and other products that they can market to people that already have Tesla cars. And NIO is starting to see that as well. NIO is able to sell the people who have NIO cars or are buying NIO cars other things other than the car that generate revenue, and some services are actually much higher profit margin than sale of a car, right? Especially software. Software tends to be a much higher profit margin sale than actual car, because the car takes a lot of cost of goods to deliver the vehicle. So this is an interesting factor to keep an eye on industry wide. If these other segment sales continue rising as they are, then you might see electric vehicle manufacturers like NIO, Tesla, and others continue to cut prices even more so that they can increase their installed base of users, so that they can then sell these users other things like insurance, um, maintenance services, repairs, accessories, and so on, and software and all those things, which might actually, in the long run, end up making a higher profit. Interestingly, the gross profit margin in the first quarter of 2023 for NIO was just 1.5% compared to 14.6% in the first quarter of 2022. So its gross profit margin saw a big decrease, and the main reason for that is the falling vehicle margin. And the falling vehicle margin was due to the changing product mix and the increased battery cost per unit. And we're seeing this across the board with rising battery costs as EV manufacturers worldwide are ramping up production. That's making it harder and more expensive to secure the materials to get the batteries in the cars, right? If there's more manufacturers competing for batteries to produce increased production of EVs, that's going to increase the cost of batteries, and that's what NIO is experiencing, as well as many other EV car makers. Also, the company had to increase promotions, discounts for previous generation of ES8, ES6, and EC6 models. Overall, the big takeaway from this earnings call, what CFO told investors here, was the decrease in vehicle sales and the significant increase in other sales that led to, in a few days later, NIO slashing prices by 6 to 9%. And I suspect that might not be the end of price cuts, as the price wars among EV competitors seems only to be heating up. So that's something to keep an eye out for. Can companies like NIO offset lower vehicle prices with rising sales of accessories, insurance services, battery charging, battery swapping, and all of the other things to make up for lower vehicle prices? Now that remains to be seen, and it's something I'm going to be keeping an eye out for, and something I'll be providing you constant updates on. All right, but that's all I've got for this video. Thank you so much for watching.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.